You're very much welcome to another edition of Dishing Out High Value Content, and this time I'm going to talk about the buy and sell signals that are given by candlesticks. One of the skills you want to develop is how to read candlesticks, because at times you'd need them. They actually do come in handy at times. So that's what we are going to touch on today: buy and sell signals that are given or revealed by candlesticks. This August 2021, I have two packages in store. The first one, I have the giving out of all trading robots for free, dating back from August 2020 to August 2021. And then the second package is the launching of our own website, which I'll share the link shortly with you. It would come with the bots on the same day. It's going to be big, so subscribe and keep following, like, and then share as much as you can. I'm Danny Legend, and welcome to Boom and Crash Expert Advisor. Most candlestick formations identify either a slowdown in the market or a speeding in the market trend, or a trend reversal. There's a close relationship that happens almost every time between reversal candlestick patterns and then reversal patterns when it comes to analyzing the charts. The good thing is that candlestick charts can actually be analyzed without any time lag, and investor behavior can be examined just by looking at the relationship between the open, the high, the low, and the close. To describe, we can have just as you know, for bearish candles, we always have the high point, the low point, the opening, and then the close, because it dropped downward. You know this already. I'm just doing a quick recap. And then we have the open, the close. You have this, which signifies that the candle moved upward. Very, very simple. I'm going to talk about the hammer and then the hanging man. For the hammer, you can have something like this. You can have the market moving down, then you have a long shadow. This is what we call a long shadow. So this is all red, this is all bearish. Okay, it's all bearish. This can be called a hammer. There are times that it might have a small wick at the top. Comparatively, the wick at the top should be smaller than the wick at the bottom. And this is close to a doji, but this is not a doji. A doji is having something like this. You know, the very small ones you see. But that's what we are talking about. This is called a hammer if it has a long shadow and a small body that is close to the high price. So usually the body is closer to the high price. That's why I drew the candle for you to see. It's closer to the high price than it is to the low price. So this is actually signaling a buy. I'm going to show you in a particular trade I took on the step index market, and then you'd see that it tallies with what I'm teaching you. The key is that the hammer is usually considered a bullish reversal signal. And then we have the hanging man. The hanging man is such that the market can be moving in a bullish mode, and then you see there's a long shadow. Then you see this. This is red here. You can have the hanging man with also a small wick, or without a wick at the top. And at the end of the uptrend, now this is the end of a downtrend with a hammer. So there's a downtrend here. It's signaling a bullish reversal. You know, that complements a downtrend, and so you should be expecting a green candle forming over here. Then this is signaling an uptrend, the hanging man. You go to the chart for you to see very shortly. Now at the end of the uptrend, the same candlestick chart pattern is also called the hanging man, and it's a reversal signal. So to get a sell signal, the market price should fall below the low of the hanging man. So this simply means that, you know, the market attempted to sell and then came back up. So it's showing you a sell signal if and only if you have your red candles falling below the low of the hanging man. This is a sell area. You see that? And then when you have, for the hammer, when you have the bullish moving above the high, it's a buy. So I'm going to go and show you the trade I took and why I took that trade. So this is bearish and this is bullish. Let's go to the charts. You see from the picture that this 5-minute for step index market, you see that right after the red candle, when I spotted the hammer, I went in for a buy, and then I was aiming for TP at the top with my Fibonacci tool. Okay, now you can check for the bearish reversal. Although I didn't go for a sell at the top, you can also check that when the candles fell below the hanging man, the low of the hanging man, it was a good sell. So I was even scalping on M5, and the same is true for other time frames. If you come here to the real life charts, you can see that at this point you can even spot a hanging man here with a long shadow at the bottom, and then right above this area, I'll turn off my rewrite. Right above the high of the hammer, we have a buy, and then the market goes into a buy zone. Then you can have this hanging man here right below the low of the hanging man is a sell, but it's even a short sell. All right, it's a short. If you are going to sell on this, you know, looking at this pattern, if you are going to sell here, you should be considering the fact that the market is turning, so your TP shouldn't be too far away. I'm going to continue on candlestick formations, buy and sell signals, and understanding the movement and the nature of the candles. So like the video, share, subscribe to the channel as I bring you fresh content. Thanks and bye.